Bombay Stock Exchange and the S&P Index has recently crashed by 806.47 points to close at 35,169.16 on Thursday. The index has also lost 9.6% of its value since 28th of August, when it reached an all-time high of 38,896.63. Part of the reason for the fall is untimely developments on the external front, such as rising crude prices, fall in the value of rupees, and the rise in interest rates in developed markets. However, it is also important to ask the question whether the current valuation of the Indian stock market is justifiable. On this ongoing stock market crisis, we have our business and finance editor Akhilesh Bhargav, who gives us more details on this issue.
The prices of shares on the Indian stock markets have been in a free fall in the past few days, and according to us, they have been in a very uncertain mode for the past few months. There have been temporary rallies which have proved to be false dawns, and they were driven just by a few handful of scripts which don't show a broad market rally. And the reason is that the investor is a nervous lot today. If the ILFS payment default was a trigger and a mood spoiler, so was the Yes Bank episode of Rana Kapoor not being given an extension by the RBI. It makes us realize that all is not well with India's financial system. The NPA crisis remains resolved, and they all end up casting an unfavorable shadow on corporates and corporate growth. But the major matter which is causing uncertainty and nervousness and which continues to loom on the horizon are international factors. The strengthening dollar means a weakening rupee. A weakening rupee means inflation and current account deficit both are not in a good direction. The China-US trade war, the tariff war, is still an uncertainty on global economy including India, and the fresh sanctions imposed by USA on Iran are also going to impact the Indian economy. It is these global factors that have got the domestic investors nervous, that have got foreign investors fleeing from Indian markets to the safety of dollar assets. So, the prices of shares, according to us, will be on a downward slide in the coming months. It all gets further aggravated by two political factors. The finance minister seems to have lost the capacity to talk up markets. His assurances don't seem to cut ice with the investors. And the second is political uncertainty. With the elections, with an election year approaching in 2019, the aura of election certainty has started building. And wherever there is uncertainty of any sort, whether economic, political or international, investors are a nervous lot. They tend to withdraw money from the stock market, which is what India is witnessing at the moment. The prices will continue to fall. The prices will continue to be weak, and we do not see a respite on the international horizon at the moment, with the oil barrel price having crossed 85 to $1 and is expected to go upwards to $100.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.